Okay, welcome everybody to It's All About the Paperwork, how to navigate a conversation with national and community banks. We are so excited to have this esteemed panelist, esteemed group of panelists. We have Steve Hall from LISC, Micae Brown from US Bank, and Shelton McClure. I will let them introduce themselves, but before they do, this is hosted by 1863 Ventures. We are a venture accelerator for new majority founders. And our goal is to get people from high potential to high growth. We're broken up into a nonprofit and a fund. We're also very specifically invested in undercapitalized markets based in DC. Excited to be here, and we're committed to creating $100 billion in new wealth by 2030. So with that, I will pass it on to my fellow panelists to share about who they are, where they work, and then we'll go straight into the questions. So welcome. And I'll kick it off to Micae and then Shelton and Steve.
Awesome. Thanks, Julius. And thanks for hosting this panel. I'm so excited to be here, especially amongst two gurus in the industry, Steve and Shelton. I'm just a mere underling when it comes to them, but I am a business access advisor at US Bank. I'm part of our access commitment program, sitting under our $100 billion community benefits plan. My role is to ensure Black business owners get access to capital. I'll kick it to Steve.
Oh, okay.
Go for it. Oh, my bad, Shelton.
Well, I'll take that pause and delay and keep it moving. So my name is Shelton McClure. I am the market leader of business banking for US Bank in the state of Wisconsin. Been here for a few years now, loving the role, loving the position to be able to help others actually get to the space they want to get to. So happy to be part of this panel and just give information, because many times that's the missing key. So with that being said, I'll keep my words short and I'll pass the ball to Steve.
All right. Well, thank you, Shelton and Micae and Julius. We accept your humble invitation to participate today. So for those of you on the call, my name is Steve Hall. I'm the U.S. Head of Small Business Lending at an organization called Local Initiative Support Corporation. So we are a non-bank lender. We partner with US Bank all over this great land of ours, and we're really excited to learn about you while we're sharing our stories. So if you have any opportunities afterwards, feel free to reach out. We're really excited to support small businesses. So Julius, thank you for the opportunity, and I turn it back to you.
Yeah, no, we're excited to be here. So for the people in the audience, there's a chat. Please put your questions in the chat. We will leave in ample time for you guys to ask questions. That's the purpose of this. We want it to be a dialogue. Shout out to our community partners, Immersion, based in Arizona, supporting entrepreneurs and really doing a lot of work to support the state of Black entrepreneurship in Arizona. But without further ado, I always want to start with kind of the personal, right? Because believe it or not, bankers are people too, right? And I think I always tell people, that's where we start with any relationship. We have to kind of get to the core of the person, the origin story. So conversation bankers don't often get, but who are you? What is your origin story? And how did you get into your role, right? Like, what was your road to this journey? And then if you can indulge us, what do you love about what you do? And we'll start with Steve, Shelton, and then Micae.
Well, once again, so I've been in banking since 2003. And so for the past 20 years, I've been in business banking. So I was in a role similar to Shelton. And, prior to coming to banking, much like most of you on the call, I was an entrepreneur for about 10 years. So, I did all kind of, small businesses where, fresh out of college, I thought I could, tackle the challenges of small business. I ruined my credit. I couldn't hire well because I didn't have money to hire people. I was late on orders at times, in certain businesses, or my customer service was lacking because I may have lost a key person who, could have made my business really, really successful, but I didn't have the resources to help them. So I actually decided to become a banker because after failing at a number of businesses when I was younger, I wanted to figure out how to get access to capital. And in that path, I joined a bank called Citizens Financial Group, which had a Midwest affiliate called Charter One. I started out as business banking officer and moved to regional manager, then market manager. But it was in about 2014 where I decided I really wanted to, help diverse entrepreneurs and what you call emerging majority ventures across the country. And I wanted to make sure that they had access to capital, because even with the success I was having at the bank, I wasn't serving the population I wanted to serve. And I found myself in the community development financial institution space, and I haven't regretted one day of it. So I love what I do. I love the people who we get to serve. And more importantly, I love to share stories like this. So thank you for the opportunity.
Thank you for sharing. Shelton?
So I started in banking a little bit about 20 years ago, and I've been between consumer and business banking. I originally got into business banking because I had a lot of entrepreneurs in my family, similar to Steve. They were bumping their head, they're ruining their credit. And because I had a bank job, everybody in the family came to me. And I didn't know what to tell them. I didn't know what to do. So I had to learn a lot of that. I would tell you that I had a lot of good mentors along the way. Whether they realize it or not, I have formal and informal mentors. I paid attention to people that did well from compensation, but also paid attention to people who did well via clients. There are certain people that I think in all industries that always get client remarks, that always get feedback. So those are people I kind of paid attention to make sure that I kind of mimicked what I did. I've been in this role now for a year and a half, but between U.S. Bank and J.P. Morgan Chase and Bank of America, consumer and business banking, I've had a chance to have a path starting up as a personal banker, a branch manager, been a district manager, sales manager on the business banking side, and a few other roles that all kind of came together that allowed me to get to know people, how they were thinking on the consumer side, but also those consumers also own businesses. Whether you're an employee or an employer, you have issues, whether it is to run a business and ensure that your employees are getting paid, but even for yourself, you have to run your own household. So I'll say the roles that I've had been a benefit. And now, as I manage the state, we just got done with an effort to reach out to prospects and just kind of coordinating that to people's strengths, not just employee strengths, but businesses' strengths. Steve had said something a little bit earlier about the folks that we're serving. So many times, you get an inquiry or a question or even a comment from someone that just doesn't know where to start. Platforms like these are vital to those folks to be able to get information. But it's the same thing as we were just doing our calling strategy with my team. We were having that be a starting point. Some simple questions sometimes that we needed to make sure that we can answer. So I know that was more than just my journey, but I do enjoy what I do. And I do enjoy seeing people kind of grow as well. So I kick it back to you.
No, I appreciate the extra insight, because I think the more people understand that it's a journey for everybody to get here, right? Like there was a life before this and there's a passion currently. So, Micae?
My journey is kind of similar to Steve's. I was an entrepreneur for almost 8 years, and LISC was actually my client going into COVID. And during COVID, I turned into a full-time employee, which was one of the biggest blessings that I could have had as an entrepreneur, but also as a professional, because I got to work within one of the best financial institutions, I will say, on the planet, as a community lender. And I got to learn all the ins and outs, especially being on the marketing side, but then also being able to work on the economic development side and the lending side. I got to see how both sides of the house work. And then the U.S. Bank opportunity came about. And I'm like, I had to take this opportunity to further understand why big banks make the decisions that they do, and why entrepreneurs like myself continue to struggle to get access to capital. And then how can I be that advocate to bridge that gap? So know what's going on in the CDFI world, but then now how can I be that liaison in the traditional world?
No, thank you. Thank you. So now let's add definitions to our conversations, right? So for you, everybody on the panelists, you guys understand what it means, the difference between community bank and national bank, CDFI, lending corporations. Can you guys grace us with definitions for that? So what does it mean to be a community bank versus a national bank versus a credit union for the purposes of this conversation? And anybody can, yeah. Steve, you can jump in.
So I think what's important is when you think about what banking structure works best for you as a business owner, right? And you know, based on this being an 1863 presentation, I mean, some of you are probably going the VC route, and you still need a bank, so it doesn't matter. You know, you have a great equity partner, and they've come in and they've, you know, looked at your business, and they say, hey, where are you going to keep your primary depository relationship? And you say, I'm going to keep it at my bank, and your bank may be a national bank like US Bank that's in all 50 states, or maybe your bank is just a community bank that's exclusive to your neighborhood, right? So most community banks are like under 10 billion in assets. Most of them are under a billion in assets, but it's they're there to serve that unique community or that unique town or city. A credit union is a membership organization, and they're there to serve a specific population based on membership. So whether it's like the postal workers union, credit union, or the railroad credit union, or church credit union. So those membership organizations have decided to bring a banking institution together to do transactions too. So much like Shelton said, maybe more consumer, there are some credit unions that do commercial products. But a community development financial institution usually is a financial institution that is a non-depository financial institution, and their goal is to primarily to invest in communities that are underbanked and under-resourced. So usually low to moderate income census tract or disadvantaged populations, but all of them are there to kind of serve you wherever you are in the financial ecosystem. But regardless, you're always going to need a depository institution.
No. Thank you. And then developing a relationship with one of those banks. So now I know the difference between the credit union, National Bank, Community Bank. I'm a business owner. I live in X state, and what is step one in terms of determining the health of my business, and then B, how to even forge that relationship? What does that look like for US Bank or Micae, Shelton? Micae.
Sure, I'll jump in. So I go backwards. You asked about forging the relationship, and then you also talked about the health of your business. I think forging a relationship, I mentioned earlier, as a banker, I paid attention to people that I wanted to mimic. I think about if you're opening a business, that idea spurred and someone either encouraged you, or you even have some folks that you watch from afar. Many times I've seen people simply see where the people they admire bank and just ask. That's a great starting point because there's some trust. I think more than anything, I don't care what institution you go to, you have to have a level of trust, because you're flying blind with a lot of the information that you are given and that you have to actually follow. And I know in a lot of relationships, especially relationship with me and my wife, I listen to her and I hear, even if I don't believe, I got to move forward. I think in these relationships as well, as you have a passion for something, you still have to be able to hear and listen. I love what Steve said. You need a deposit relationship to be able to move forward. So I would say one place to start is paying attention to mentors or people that you admire in business to start a relationship. If you don't start there, actually going into your local bank, interview folks. I remember when I was a banker at a branch, and a person came in. I called myself. I'm profiling. I'm doing all of this, and they got a pad out. And I'm like, all right, maybe they're taking notes on what I'm saying. They had a list of questions that they were actually interviewing me to see my response and how I would handle it. And this was early in my career. I sounded just like the manual, just like the book, had no flavor or any experience. And that person pretty much told me, say, I appreciate you letting me know what you're doing. I got a few other places to interview. And it blew me back, but it also like left something with me on, you get to choose. You get a chance to choose on who you engage with and deal with. Although things will not always go your way, you do have that ability. So I would say the second way is to interview people. When you asked about the health of the business, I'll just touch on that real quick. I think about, are you making money? And when I say, are you making money, it could be revenue, it could be sales. Are you making money to be able to continue to proceed? People talk about being in the red, being in the black. Certain industries is going to take longer than others. That is true. But if you don't have benchmarks and mile markers to be able to continue to go forward, you can get lost quite easy. So when you ask me specifically of the health, I need to know the construct of the actual business. Is it some partners? What experience do they have? I don't want to give them a short leeway when they need a longer one because of their starting point. I also think about the industry. Certain industries are going to just have, take longer to be able to launch out and get their return on their equity. So those are just a few things I'd say. I don't know if Micae, you had any add, but.
No, I was actually gonna one shout out to that because banks, we're the customer, so we have to interview for the service, right? And we have to have an abundance mindset. So although access to capital is really tough for business owners that look like me, there's banks out there who are all vying for your business. Understand that and vie for that business. So, but Micae, what tools, right? So I'm a business owner. I don't know the right questions to ask. I still want to get an understanding of the health of my business. What tools do you guys offer to help business owners think through that process?
In terms of tools, good question. I think one of the things that we offer just as an organization is me as a business access advisor. And then we partner with other external organizations that help dive deep into your internal paperwork to really fully understand the financial health of your business. So organizations such as SCORE or the Women's Business Development Center, various technical assistance agencies that can help you. So I want everyone to keep in mind that like the bank is not a nonprofit like a CDFI, and even some CDFIs, they still aren't technical assistance providers. So you have to understand where you're going is like a financial institution. So we are good at loaning money. We're not necessarily good at technical assistance. So we are going to send you to our liaisons and our partners that are really, really good at that are going to put you in the best position to come back to the bank.
No, so that's huge, right? So everybody still needs the resource partner, interview the right banker that fits you, and maybe the geography also is an additional element there. But in terms of where do I do my research to find out, right? So Steve touched on this. In our world, a lot of times founders think VC is the only line for it, right? Equity, equity, equity. What are some other loan instruments that you've seen have been really effective for startup founders, right? Because startup founders will self-select. They're like, no, I don't go to a bank. I'm gonna just hold out here for the 1% of venture funding that's going to people that look like me. I'm gonna take 100 meetings, 300 meetings, and hope for that funding to come in. What are the other loan instruments that exist in either of your worlds?
There's so many, but it depends on what you mean by startup. Because a startup to Steve and a startup to Shelton are two different things. Well, actually, maybe not, because LISC is a little bit different. So they kind of work like a bank too. But what is a startup? Like, let's start there. So 2 years, in many people's worlds, is still a startup. You're still trying to figure out your business, but you really have to be 2 years old to get any form of like traditional financing from major financial institutions. However, there are products within banking institutions, if you have a solid credit score, where you can get equipment or you can get a credit card. You can get up to like $50,000 in equipment with no financials if you got your credit score together. Like there are products out there, and I think you have to be 6 months old. Correct me if I'm wrong, Shelton. So there are products out there. Yes, there are products out there. If you position yourself appropriately, if you're less than 2 years old, that you can get, and you can get 20% over for soft costs on that equipment, by the way, to help you out with your startup costs. And then tack that on with a credit card, and not using your personal credit card to bankroll your business finances is also extremely important. Steve and Shelton, do you want to touch on some more of those products that are out there for startup? And let's also talk about what is a startup, because I feel like business owners are struggling, and I meet a lot of business owners that are less than 2 years old, or those that are 2 years old but aren't bankrolling like 2 years old. What happens then?
I'd be happy to kind of jump in. So I, I think what's important is when you're looking for credit, or you're looking for equity, you need to have a framework for how you want to approach both. And when you seek out equity, you're sharing ownership of your new venture. When you seek out debt, you're agreeing to some, outstanding covenants, right? And I've seen small business owners do everything. I think Micae just talked about it, using personal credit cards, home equity lines of credit, friends and family injections, hard money loans, and all of the financial products that are out there. So I don't want to pretend that this audience isn't familiar with them. I would say this: if you're a startup, if you're less than 6 months, the longer you can delay securing debt is going to be a win for you. So less than 6 months, if you can secure friends and family, and or you can run a number of sales based on even factoring or something like that. There are ways where you don't have to take on a lot of debt within 6 months. It's tight, but there are ways. 6 months to 2 years, you start getting into the CDFI space, or banks like US Bank who have great programs like the one Micae was sharing with you about. The reason why you want to always start with the bank is at that 6 month level, banks, because they're so highly regulated, they're going to refer you to the highest, best partner for you and your business. Non-equity partner, right? They're going to refer you to another lender, probably a mission-based lender if it's outside of the bank's credit box. When I was at the bank, I used to refer people to an organization called Axion Chicago that's now Allies for Community Business. And when I left banking, I joined Allies for Community Business. I couldn't believe it. I was like, man, I can go over there and help. But they would take people when it wasn't ready. Now, I'm going to caution all of you. There is a lot of predatory debt out there in the small business space. And there are a lot of operators who come to you and they say, hey, I can get you the money fast. And they will tell you, I believe in your dream. I believe in you. I'm here to help you. Really, they're there to make a commission. So anytime you see an interest rate over like 12 or 14%, and it's not a credit card, you should have some caution. And if it's a credit card over 25%, you should have some caution. So, financial products come with an implicit rate of return based on the risk that's assumed. So if the risk is really, really high, then your interest rate is going to be really, really high. Once again, having a conversation with a banker will tell you, you can go to this organization. Maybe they have some special programs to help you get capital a lot faster than what we can do. And then what we look to do at the bank is we look to come back and help you grow once you hit that 2 year mark.
And only add I'll have, Julius, is just I think about Steve just said something about risk. Like that's what it's about, risk. No matter how passionate you are about your project or your business or your venture, industries, different ones have different risk factors. And whether it is a big bank, whether it is the CDFI, whether even some of these predatory lenders, I love how he just said again, above that 12%, above that 25%, your eyebrows should be raising and you should start really inspecting the documentation and which one you're signing. Because again, once you get over there, those payments, again, that just come astronomical. So that's the only ad I really wanted to say. I think Steve and Micae did a great job of just talking through options and ability. But yeah, I definitely want to say risk. Risk is a portion of any type of lending that just has to be an ingredient. And we have to be honest with ourselves on the type of industry or type of business that we jumped into. And when I say we, you as an entrepreneur, and understand that all industries aren't created equal, and the return on the investment, whether it's a loan, whether it's the equity, it has to be risk assessed. So just wanted to throw that out there.
So we've touched on a couple of things, right? The risk is there, and the reality for a lot of business owners they come to the banker because they need the money yesterday, right? So they're like, I should have done this. How do we level set that, right? Because now they've seen the resources, they've seen bankers who are saying, hey, reach out to me because we're going to share information. Is there an expected timeline to even build the relationship, to go through the process, to go through the paperwork, to then even potentially get that financing? Because I think, or differently, what are the misconceptions around timeline when dealing with the bank or CDFI? And anybody can jump in.
All right, so
I hate that question.
I love that question. See, I'm gonna save the bank. So one of the things that's important for everybody on this call is, every bank wants to say they got a really fast process and we just need a complete package. And what we consider a complete package and what an entrepreneur considers a complete package are two different things. So a lot of time is spent on document collection that is probably not a value add. So I'm just going to recommend the following. When you're applying for under 50,000, those processes are really, really fast. And I think fintechs can do a really, really good job of that, even though the rates are higher, right? So there's some of them that are non-predatory. look up the Small Business Borrower Bill of Rights. There's some fintechs who, they testify to Congress that they won't charge you high rates. Not necessarily true, but at least they put it in writing. So they can have a fast process. But when you're working with a lender and you want to do a relationship type loan, and loans over 50,000, we need to build a relationship. Like it's like joining a religious organization or marrying somebody. It takes time for us to figure out if this is the right place for me. And I understand most entrepreneurs don't have time, but if I tell you my process is 4 to 6 weeks, assuming I got a complete package, and you thought you had a complete package on day 1, and I thought you had a complete package on month 4, there's a big disconnect there. So obviously, Micae mentioned this earlier, identify technical assistance partners, start at that bank, because all CDFIs do different things. So I don't do micro lending. My average loan size is like 560,000. So I do have partners who do those smaller, faster, quicker loans. But when you come for the big ones, they take time, just like they do at a bank.
And into that, the title of this webinar is, it's all about the paperwork, right? So what I read between the lines is banks appreciate the paperwork and the time it takes to build that relationship to really determine what you need. So from a bank perspective, what does the paperwork look like? What are the essential things when you're coming in that you have to have ready, you should consider? And if you don't have, how do you even get help to get your paperwork in order?
Micae, you want to start and I add on? That was a hard no with no words. Well, so again, so let me even just touch on what Steve said, then kind of blend into things that you want to come day 1 in preparation, right? But to Steve's point, he's absolutely right. Time is relative, and time is not typically not an asset that most entrepreneurs have, but unfortunately must give and must sit in sometimes. I do believe, to his point as well, you have to pay attention to the actual cost and the amount that you're looking to get to have a proper expectation. The bigger the dollar amount, the longer it typically is going to take, and the more intense paperwork or more scrutiny that you'll be under for what we are discussing as well, even afterwards. I think about, construction loans, and I think about the scrutiny that we have on them from one item to the next, to the continuation of things. So you just have to, don't think it's wham, bam, thank you, ma'am, I gave you my documents, you give me the money, and we go on about our way. Certain situation, it is a lot tighter relationship, I would say, in which one it may be uncomfortable. So I just wanted to make sure I said that, because I do think about the amount of time, and it's funny you say complete package. We're just having a conversation about complete package and what that actually is. So getting to what you just asked about coming ready. Many institutions will let you know exactly what we're looking at if you come and ask. Sometimes some institutions don't want to scare folks away and say, hey, I need 2 years tax returns, I need a P&L. Some won't do that. But if you come out and ask and say, here are the documentation, this is barring that you already have not been connected with a CDFI. This is barring that you already have not been connected with one of the resources Micae talked about before. And many of those will walk you through, and they'll give you about 80 to 85% for any institution of the things that you need. But if you don't have that, many institutions will give you that. Matter of fact, I just had a banker, and I was just helping them on this loan that they were dealing with. And the CPA had actually asked, hey, here's all the documentation I had to use at X Bank. Is this on point? And the banker was able to come back and like, well, you're missing about 4 documents. Can you go and can you create these things? So whether it's a CPA, whether it's direct from you, ask. Because they do want to have a complete package to be able to work on to see if we can get to a yes or a no. And that's not just here at our firm, that's at most firms alike. So, Micae, is that a good starting point for you?
That is a great starting point. And I will also say, please don't come to the bank when you need capital. Like, that's the worst time, because I'm the one helping fight for your deal. So I'm going to Shelton and I'm going to Steve, because I'm actually like the one that is like the dreamer here. Okay. So just think about, I'm the dreamer and Shelton and Steve are like the boss. And I'm going to the boss with all these hopes and dreams. And I'm going to them with these dreams, but the dream is basically dead. So it's easier to sell a dream when the dream first starts and you're like an REM. That's like the best part of the dream. But when you're almost out of your sleep, the dream's over. So it's better to go to the bank when you don't need money than to go to the bank when you desperately need money. It's like two different states, right? It's a whole lot easier to lend to. Your cash flow is popping. You know, your paperwork's actually in order because you have paperwork to show that you actually want to show. You're probably not commingling funds. So all of that stuff is together. You're not, borrowing from Peter to pay Paul. So come in early so that we can help you. It's better to have when you don't need it than to not have it. That's what I will add on as
No,
a person that's advocating.
I appreciate that. So yeah, let's asset frame this, right? Because the other side of the entrepreneurship life cycle is they always say, I don't see anybody who's gotten a loan from a bank, right? So can we share some of the examples that you guys have dealt with, like so that worked really well, that you can share, like this deal went through because of this, and this is what we liked about it, or this deal was about to go through, it didn't go through, but it could have if they did this. Let's talk real life examples.
Let me give you a real quick live example of a deal that could have went through, but it didn't. So I had a client that actually came to us as a bank by way of our access commitment program. And this client, I told them all about, listen, I know that you're not like all the way into your 2 years. Here are the equipment finance options. I just need you to work on your credit. They got their credit score up to, I think it was like a 690. We were able to secure them with some equipment finance, $49,000. They were also able to do some percentage over for soft costs. Really great, right? But let me tell you what else. They thought that they were going to work the system and go to one of our sister CDFI partners and not disclose to the CDFI partners that they just recently got some funding for us, not knowing that we all talk to each other and not including that into their debt to income ratio. So even though they qualified for the deal with that sister CDFI, because they didn't have good integrity with coming to the table with all of the debt or loans that they recently applied for or got credit for, they didn't get any of the loans. So it's so important that you come with integrity and know that we legitimately want to help you. So tell us everything and put it all on the table. People, especially people that look like us, and if we look like you, we want you to get the deal. Like 9 times out of 10, there's nothing that is stopping us from wanting us to help you. So lay it all on the line. I got a deal from this, organization. This is how much it is. How much can I get from you? Because this is what I'm trying to accomplish. It is going to hurt you in the end from lying because it is all going to come out. If you had a VK, just let them know up front because it's going to come out at the end in underwriting and the deal is going to be killed and you wasted so many people's time. People aren't going to want to work with you in the future.
Thank you.
Man, look, she started preaching, but I want to give a different experience. So I think it's important. And Nathan just put a question in the chat, and I want to respond to this. Small business owners are scared to get that. They're terrified, and that anxiety, especially with the emerging majority venture founders, they barely want to approach VC. You think they want to approach debt? Like there's a negative connotation with people of color when they're going to secure debt. So that's number one. Number two, there's also what I call fast talk, right? If I go to the barbershop where nobody's ever done a loan except for me, they tell me about all the great loan programs. And I'm amazed at the wealth of knowledge my barbershop has, man. I mean, they tell me about new loan structures and commitments and all this other stuff, but none of them come back with the loan the next week, right? It's a weekly, trip for me, right? And they will tell me that, oh man, you can do it. You don't have to personally guarantee. You can get like $100,000, and and they just start telling you all this other stuff. All lenders require you to personally guarantee for a business if you're a startup. All lenders do. Lenders want you to have some kind of skin in the game because the capital they're giving you, especially for a startup, is really based on you being an individual who wants to start this business. Like you're not creating anything new. You're actually doing something that somebody else is doing, and you're saying you have the audacity to do it better, and it's our job to support you. But the only way that we kind of protect ourselves is getting that personal guarantee. Now, how we execute on the personal guarantee may be different from a CDFI perspective and a bank perspective, But at the end of the day, it's still really, really important for you to be willing to sign on the line that's dotted. Now, if your credit score is bad, don't give up. Banks are not going to lend to you with a bad credit score. Some CDFIs will, right? So, and it's also important to know the difference between a community development financial institution that's referred to by a bank or online lender that says they do this, but they really don't, and they just give you a predatory rate. So really, once again, that bank relationship is really, really important. Relationships with organizations like 1863 are really important because they can direct you in a way so predatory lenders don't try to take advantage of you, because as soon as somebody say you don't have to personally guarantee, there's a trick to it. You don't have to personally guarantee equity. You want to know why? Because they're going to take your company. But you do have to personally guarantee a loan, and sometimes that lender will take your house, and that's part of SBA guidelines. So if you kind of read through the fine print, stuff for you to be concerned about.
And just for the audience, the question was, how do you approach debt for startups when they can't personally guarantee? So thank you for answering that, Steve.
But you had to personally guarantee. I answered the question. I just
No. I love your answer. I just wanted people to know what you were responding to, right? Because they can't see the chat. Steve, Shelton, did you want to add any examples from your end?
Well, so I'll say on the flip side of Micae's story, and just to add on to Steve as well. So to Micae's story, I think about us getting a loan through, and it was because of, again, you think about the C's of credit, and everybody in banking, you think about character. She had mentioned, again, I think about having good character can definitely help or kill a deal. And in this situation, just recently, we had a deal go through where, again, the person was honest. They were completely open. We were able to bring in different people to help them in certain situations. So whether it was a shortfall, whether it was a partnership, and actually get them over. Had they not been completely open, and I've had many situations like this, we get partial information, we get partial reality of what's happening, and then it's just like a jigsaw puzzle. It's 10 pieces, I only get 2, and I'm blind as I'm going through this process, versus them giving me all 10. And that situation allowed us to see, well, hey, even though you were thinking about going down this path, I'm aware and have had a similar situation with this. Let's chart this path. So I definitely agree with both of them. And make sure you come up front, even if up front is hard to hear, hard to say, and just hard to exist. That's okay, because you can start a path, because it's all going to come out, especially when we began to do credit pools and having those things in those situations. So that's probably the biggest thing I wanted to say on that point, Julius.
So it sounds like show up early. Don't wait till too late to get the financing. Come with integrity, come with character. And when you get a deal that sounds too good to be true, like you don't have to personally guarantee, maybe get a second opinion, because there's something you probably have to give up that you're not realizing. And predatory practices still exist, even though they might pledge in Congress, we don't do that. There's still things that happen that disparately impact populations that don't historically get funding, right?
You're absolutely right. And I was just, I'm sorry, Steve. I was just going to hit on your point, just around personal guarantees, because to the point, as a lender, if you're telling me that you're not all in, I'm immediately questioning the why. If you're saying long term, you're deciding not to be in it, I need to know why. Are you planning for it to be so successful that you're going to sell it off? Are you planning to just get it going and to jump into something else? Because that's another issue that I've had earlier in my career, where people, you're a serial entrepreneur, but you have no experience and you have no idea around this specific industry or business. And again, some folks come to the bank thinking that, hey, it's all good, I can move forward. So I would definitely say, when it comes to the personal guarantees, again, you're putting your skin in the game. And as a bank, I'm believing in you and your idea. Micae mentioned dreamer. I'm believing in your dream, and I'm trying to move that forward. But if you aren't fully vested, it's kind of hard for me to be fully vested as well. Steve, I'll kick it back to you. I didn't mean to cut you off.
Oh, no problem. I was just going to have fun, because he did ask for success stories. So the difference between a bank and a CDFI is I got hundreds of success stories on our website. So I'm extremely excited about that. Go to www.lisc.org. I can tell you about how we done gave loans and grants and all kind of stuff. It's the best website in America. And that was my commercial. I'm done.
that's commercial. And so we do have one more Q&A. So Julian said, does US Bank do gap financing? Say I secure a government contract and need funding to fulfill that order. How does that work?
We'll let Shelton take that one.
What was the question? Is it the second one in the chat?
Yeah, does US Bank do gap financing? Say I secure a government contract and need funding to fulfill that order.
Gap financing, I do not believe we do. When it comes to the other item, I'll tell you, I have to look more into that. And I actually can follow up with you, Julius, around the specific vendors. Because if I'm hearing your question right, are you asking, oh, here, I can click right here and see the actual question. If you have VCs to take. Oh, no, that's not the same question.
No,
so
but
if I'm hearing you right,
maybe LISC may do gap financing.
Well, let's we're not gonna call it gap financing. So he's talking about mobilizing a contract that he has with the government, and he may actually have another senior lender that's outstanding, and he's using his line of credit to draw against that, and there's a gap, right? So what you need is you need mobilization financing for that. That is something that we do. It has to be with like a Fortune 500 company or the federal government, and it has to be something that you've done before. So you can't get it like a brand new contract with the government and we go, oh man, he got a brand new contract, $5 million, we're just gonna finance it. So we don't do that. But it's that's something that's possible. It's not technically a gap. It's just how you're using your credit facilities to benefit your business. But all credit has to start with a discovery call where we have to take time to discuss what it is that you're doing and try to look at it in the framework of all the debt that you have outstanding, and equity. So not just a unique, just like one-off question. It's a question that is baked into everything else that your business is doing.
Okay. So that means please have all your paperwork together if you come before Steve, or the deal is just going to be killed. He needs to see everything, like a whole entire global cash flow analysis. That's what he's saying.
They don't have to do it. We'll do that for him. Just bring all your paperwork.
And so Steve, we're going to touch a little bit on you. One of your other hats is you're the head of the Entrepreneur of Color Fund. Can you share a little bit more about that? Because I know, like you said, you have success stories for days, but share a little bit more about Entrepreneur of Color Fund. How did it come into play, and just share about that, please.
Sure. So we lead an initiative with a number of collaborative banks. US Bank has been an investor in the past. And it's a lending initiative to make sure that my CDFI partners are lending to entrepreneurs of color. So ideally, what's discerning is that a number of CDFIs did not have representation for the community that they serve. And so when you don't have the representation, people tend to still identify loans that they're most comfortable with. So when I came to the CDFI space, I had an opportunity to see, much like in the banking industry, it's like where the people of color, people of color, as you add more people of color, you're able to open up into different markets. So we came up with this initiative with one of our funding partners, and, they said, we're having some success, but they weren't deploying a lot of capital, right? And we started having a capital conversation, and I treat this initiative kind of like business banking when I was, at a competitor bank. I wanted everybody to be thinking about small business lending all the time, making sure you're investing in our targets all the time. So we have about 24 partners across the country. We're in 10 markets. We have monthly sales calls, and I make sure those partners deploy somewhere north of 300 million a year in their respective markets, right? Like we're putting cash on the street like you wouldn't believe. We just had our first annual kind of sales rally. Like we're like, hey, everybody, I need y'all to come together and do more. And we have CDFIs in all part of the spectrum. So we have the micro lenders, intermediary SBA lenders, and those who kind of do the bigger real estate stuff or the business acquisition stuff like we do. So it's been a really good initiative. And we also created a credit facility to help those CDFIs who are growing their balance sheets. So CDFIs are businesses too, just like US Bank is a business. So when US Bank needs money, they go to the Fed. When other CDFIs need money, they come to me. So that I don't know if that's good or bad, but it's LISC has 32 billion in assets under management. So we're the largest not-for-profit community development financial institution in the country. So it is important to me in our initiative with the Entrepreneur Color Fund is that we're creating opportunities to make sure that CDFIs, if it's not us, that they have the capital to invest in their communities, and we're committed to it. So, most of the stories on our website are stories where LISC made the investment, but like this year we've done 284 million already in the 24 markets that we're in. This year's not over, so we expect a big Q4. And then my team has done about 33 million direct in just all kind of loans. So our biggest loan is $8 million. For this year, I'm going out to do a grand opening with the business owner in Los Angeles, California next year. So an entrepreneur of color got an opportunity to buy really expensive real estate to put their business in. So we are committed to help, emerging majority entrepreneurs have success. And, we're just, kind of proud to partner with 1863.
Man, that is one shout out to that. The biggest CDFI in the nation. You're still deploying capital, and that's huge because this is a down market. And in a world where we think there's no funding out there, you're saying actually that's not the case. We're still deploying it. So that's amazing. So US Bank Folk, what are some of the initiatives you guys are currently heading up in your regions to get the word out about the work that you do, the support that you have for entrepreneurs and business owners that you'd like to share?
I'm gonna let Micae take this, but let me start off even with the existence of her role. She had mentioned that she's a business access advisor. And I think her role is so critically important because she does get a chance to be an advocate of a lot of businesses that we wouldn't have a voice for. And when you ask about initiatives, the introduction of her role was a reaction to ensuring that we had more of a voice and more of an ear, like in the community. And the little time that I've had a chance to spend with her and her counterparts, and whether it be in Minneapolis, whether it be wherever we've had a chance to go to, it's been kind of breathtaking to hear the impact that they've had and what just a voice or an ear can actually do. I think a lot of the things that we're talking about come to the table and come prepared with the paperwork, vitally important, right? But I think it's also a good thing to make sure that you have an advocate that can tell the story and that can put the story together to make it make sense. Bank talk, CDFI talk can be different than entrepreneur talk. And we have to make sure that we find a middle ground to merge together. And I think her and her counterparts do a phenomenal job of that. So I would say, like, in addition to the access to capital, all the initiatives that we have, I think even in our introduction of her role was a big piece. So you like that setup, Micae? Let me throw it to you now.
I mean, I don't know what to say after that. Thank you. Shelton's absolutely correct. And in addition to my role, we're also doing things to our lending process as well. So we've rolled out a business diversity lending program to alter our credit guidelines to products that have been a little bit harder for minority women and veteran-owned business owners to achieve. And so we've been doing things like that as well. We've also been investing in other minority banks to make sure that banks across the country are able to be established. We've been investing in major minority real estate development companies. So just across the board, our Access Commitment Program is just dedicated to the community at large. Like I said earlier, it's a $100 billion community benefits plan. It's the largest community benefits plan in the history of banks. So I'm proud to be able to say that and that I fall underneath that umbrella. And it's just, I just want to just end with the fact that all of these things mean nothing if you all don't walk into the bank and really just demand the information that you deserve. So people can have all these commitments out here, but if we don't go to the bank or you don't pick up the phone and really demand that you get information and you want to understand the credit policy, because it's really all about the policy, it doesn't mean anything. So it's all up to you. The world is your oyster. It's all what you make it.
Man, okay, come on, church. But so I have one more question, and I'm gonna put this to Steve, and then we're gonna take then we're gonna open it up to the questions in the chat. But so Steve, as we're fighting and advocating for greater access and we're doing the work, we're launching these initiatives, what role does policy play to ensure that this work continues to live beyond us? And what are some of the most interesting policy plays you're seeing generally? in the space?
Yes. So I'm gonna give a really good answer, and I want everybody to have an open mind when I say what I'm about to say. But there's an importance to voting, and voting really puts the people in office who are going to reflect the policies that will, bring investment back to your business, back to your community. And I think a lot of times, people genuinely think that both parties are the same, or it doesn't matter if I vote. And I'm gonna say that's not true. And I'm not telling you how to vote or who to vote for, but affirmative action is under attack. And if you have contracts with the government or large corporate institutions, and they have been doing these programs for the greater part of 50 years, they were doing them to level the playing field. If you believe in your mind that the playing field is level, then hey, good for you. I mean, you have very selective vision, because I still see a lot of poverty in America. I still see a lot of communities that have been left behind. And those communities that seem to be most underinvested are Black, brown, and rural. And when I say rural, that means poor white people too. So I'm not, this is not a merging majority venture discussion. This is a people discussion. So when it comes down to people, politicians have to make sure that certain programs are set up to make sure that the playing field is level, and the top of the economy doesn't get all the resources, because, unfortunately, the people with all the wealth, they win in good economies and bad. It doesn't matter. They're set up to win. But for that small business owner, we have to make sure that we're chasing policies that invest in rural communities, that invest in low to moderate income census tract, that invest in women, that invest in people of color, that invest in our, former members of the armed services, the veterans. And the reason why we have to invest in them, because all of those populations are disadvantaged. Most of the veterans don't come from Ivy League schools. I'm just letting you know. So if anyone says, oh man, it's not that important who I vote for, what I do. No, it is, because when affirmative action is under attack, affirmative action helps women. It helps people of color. It helps people who are disabled. It helps people who are disenfranchised in a number of different ways. And the importance of policy is making sure you have people going to, to the State House, to the U.S. House, State Senate, the U.S. Senate, to the White House, that reflect your values. And I mean your real values. If you want to make sure that investment comes to your business, then you're going to have to, number one, get behind those politicians. So the power of voting. Number two is the power of aligning yourself with organizations who have good values. Now, we have a strong policy team. Our policy team has a national agenda. It's on our website. Once again, go to www.lisc.org. But our agenda is to really help affordable housing, help make sure that there's safety and players in a number of places, and that there are jobs and workforce opportunities. Because the other side of small business is workforce. Small businesses employ people. So our passion in the space, it really goes beyond just making sure we have somebody who has our values, but we also have to come with an agenda for them that they have to follow, right? So your partners in the space become extremely important. And the last thing in this space is, if you're going to be a small business owner and you're going to go after contracts that could be, supplier diversity type contracts, or contracts that are, carve outs through 8A or whatever, you're still going to have to be fearless. You're going to have to understand that regardless of the headwinds, people of color have survived and thrived under some of the worst conditions, just because they refuse to give up. So no matter what, you're going to have to be fearless. You're going to have to, talk about policy and strategic actions to make sure that you put not only your business in a good position, but the businesses in your community. And when I say community, I don't mean just the neighborhood you live in. I mean the whole community. So if you have homelessness or tents in your community, that's bad for business. So somebody has to reflect on affordable housing. If you don't have grocery stores in your community, somebody has to reflect on, healthy food and making sure that people have access to that. So all of it is connected. And if they don't have health insurance, that's, universal health insurance, we had it. That'd be a big savings for small businesses. Have you seen your health insurance bill? I don't know how big y'all are, but as your business grows, health insurance become your second biggest cost after labor. So everything is connected, but don't sit on the sidelines and say, it doesn't matter if I vote, because it does.
No, thank you. So vote. Stay tapped into your community, but think broader than your immediate community. So we have one more question. We have 5 minutes, and I'm gonna merge this question into one. So the first part is VC-backed startup comes in, they've given up a lot of their equity. Who guarantees that loan if they don't own majority share of their company, but they're coming to a bank? And it looks like a lot of startups face that scenario where traditional banks don't know how to lend to a VC-backed startup who's already given up equity. So how does that work? That's the statement in
The
question.
shade at us on the traditional side. Shelton, did you hear what he said about us? What you got to say about that?
I heard
we don't
it.
know how to do what. Did you hear that? I didn't like that.
Well, and I'll go backwards, and then I'll say this: we do know how, and we're selective. And I'll say it always goes back to I have to rely on my favorite word, risk, right? With this ever changing, even with VC being out here for some time, even with us having some examples, it's still in. If the portfolio for our specific institution is performing well, we have a tendency to be able to be more likely to do more things. But if it isn't, which many cases it has not, and I think that's a conversation that often isn't had on the performance of past, whether it be industries or even vehicles or debts that we've given out. It heavily influences what we will do as we go forward. So I'll say that. So Micae, I do understand the why on why that question was phrased that way in statement. I do, but at the same time, I would say it is true in some stances, but other cases, a lot of cases, most cases, Micae, it ain't. Right. So, but I'll pass the mic to you.
I just want to piggyback off of what's the bank's appetite to do things that have worked well and not to do things again that haven't worked well. Let's think about what's happening in the trucking industry. I have a lot of folks that are in the transportation industry right now. Everyone thought that the transportation industry was hot, and so did the banking industry. And a lot of these loans went out. CDFIs were lending heavily too to the transportation. LISC, okay, fine, you were the only one, but there are a lot of other CDFIs that were lending heavily to the transportation industry. So the loans are going out, these vehicles are out there, but then look what's happening to the industry. Look what happened to Yellow. Look at these companies that went under. So when you think about coming to the bank, also check the temperature of what's going on in the marketplace, especially from those major institutions. That's probably what we're going to lean towards, because that's probably what's going to happen to you. It's kind of like a trickle down effect. So just keep that in mind. And if you're in the transportation industry, I feel really, really bad for you, because I know it's really hard, and I'm really sorry.
Can I say something controversial?
Say it again.
Can I say something controversial?
So say something controversial, and then say one last thing you want people to remember, and then we're going to go down because we have about 2 minutes. Yeah.
So the VC question is, I'll be honest with you, lenders are trying to find somebody to hold responsible for the loan if it goes under, and they know the VC won't be responsible. So unfortunately, if you sell off more than 50% of your company, you're probably not getting a loan from anybody.
That part. And so what a big takeaway for the audience as we're closing out, things to remember, and then how do they find you minus LISC.org?
Please don't look for me. Look for LISC. We have a number of people across the country. We got 38 offices. Somebody can help you. But if you want to find me, I'm available on LinkedIn, and I will refer you to the right party. But I'm excited for all the business owners, but unfortunately, I can't talk to all of them. So,
Thank you for your time, Micae, Shelton. Last words. And what I could do, I
Oh
can follow
man,
up with your contact information to the audience.
last words. Don't give up. Like everything, majority of stuff can be fixed. Like, please don't give. You just heard Steve say he jacked up his credit. He failed 10,000 times, and now he's leading leading the largest CDFI across country. So please don't give up. Like sometimes you're gonna have to like pivot. Your business right now may not make sense if it's not profitable, but it doesn't mean that you shouldn't be in business. It may mean you might have to meet the demands of the marketplace. Don't be so sold on this idea. Be sold on the fact that you have talent and that you have vision and you have a purpose. So sometimes you may have to give up that little idea and shift. And a shift is totally fine. Just don't give up. Keep going. And you can find me at micae.brown@usbank.com. So first name dot last name @usbank.com.
Boom. Shelton, close us out.
I love the pivot, and she is absolutely right. If it's worth it, continue forward. And I think many times we give up too quickly, too premature, because we hear a no or we hear an alternative. If it is worth it, continue forward. To that point, you can also find me on LinkedIn, and my name, Shelton McClure, shelton.mcclure@usbank.com. But yeah, Julius, I appreciate the time, as well as being able to be on a panel with Steve and Micae, because even some of the things both of you said, I was able to take in. So I appreciate it. And hopefully I was able to give some benefit to someone at some point today.
And so with that, we thank y'all for tuning in. Thank you, Steve. Thank you, Micae. Thank you, Shelton. This was a fantastic conversation. We will record this. We will put it up on our YouTube so it could be shared. We're going to chop it up, chop and screw for the sound bites, but we're grateful. We're thankful. 1863 appreciates you. And with that, we are done.